Hi, I'm Max Lopez.
Hello, I'm Ricky Velasquez, and we're doing our financial analysis on Tesla and Ford.
So before we analyze our companies, we need to understand who owns our companies. And we looked at Tesla and Ford, and they both have around 25% insider ownership. But the big difference is institutional ownership, with Tesla having a 59% institutional ownership and Ford having around 6% institutional ownership. And the question comes up as, is institutional ownership good or bad? And it could be both. If an institution owns your company, that means they did a really deep analysis of your fundamental financials, and this could market the company and increase share price. But on the other hand, if that institution's interests swing opposite of the interests of the company, then it could cause a major sell-off, and that would decline each share price by a lot and impact an individual investor hugely. So we recommend Ford under these circumstances. Okay, so before we get into cost of debt financing, we need to ask the question of why does cost of capital even matter? So what cost of capital is basically the balance between your debts and your equities. And this has a major influence on a lot of things, such as your company's risk, the company's ability to access money, how expensive that access to money is, and what your investors and lenders expect to get in return. So let's say a company is debt heavy. That means they're pretty risky, and those investors need to be compensated for that risk. So our recommendation under those circumstances would probably be Ford. They have so now we can ask the question, what is cost of debt financing? But first we need to find the pre-tax cost of debt, and we did that by using the Moderon spreadsheet. But we also factored in interest coverage ratio. So with that factored in, we had a pre-tax cost of debt for Tesla at 6.48% and for Ford at 4.18%. And we used that to get the after-tax cost of debt. And what we did was we just multiplied the pre-tax cost of debt times the difference between the effective tax rate and the total interest rate. And we got for Tesla 6.57% and for Ford 3.91%. And so with those circumstances, we would recommend investment in Ford because so now we look at cost of equity financing. And we took the T-bond rate of 2.91% at the time, and we used the Moderon's recent risk market premium of 5.75. And with the beta we calculated, we got a cost of equity for Tesla at a 7.63% and a cost of equity for Ford at a 10.67%. So we would recommend that you go with Tesla because what that means is it costs the firm less to sell stocks to their shareholders to raise capital funds. And so after we get the cost of debt and we get the cost of equity, we can go ahead and find out the WACC. Now all we needed to do was get the debt ratios and equity ratios and multiply them by the cost of each. And so that gave us a WACC for Tesla at a 6.95 and a WACC for Ford at a 6.03%. And so with those numbers, we would recommend you go with Ford because in general, a lower WACC means the company's less risky, which means that your money is safer with Ford than it is with Tesla. So we used the Moderon's template to get optimal debt. Now, optimal debt for Tesla came out to be 0%, and that was kind of weird, but the Moderon says on a spreadsheet that it could be 0% if the company's facing a deficit, and Tesla was, as you can see, facing a deficit. So what that means was that they weren't able to pay off all of their interest-bearing debt because they weren't making any operational profits. So we have the optimal of 0, but to decrease the debt by 64.54% isn't realistic. And we think because Tesla's in their growing stages, that that may be the reason why they're at such a big deficit. Now we look at Ford's optimal. Ford's optimal is at 30%, which is a reduction of 39% if you want to get to the optimal. This is more realistic, but Ford is pretty dynamic, just like Tesla, and they're very innovative. So maybe a justification of that is that they need a lot of debt to fund their developments. And with that being said, I would recommend Ford. Okay, so now we look at how financial restructuring would affect the company. Like we said before, both companies had to lower their debt ratio, but for Tesla, it's not an option at this time. So I would wait until they start realizing the profits from their developments and their, cutting edge technology. But for Ford, they can afford to decrease their debt ratio by at least 10-15%, and this would positively affect the company and give them a higher bond rating, which in turn would affect the stock positively. So we would recommend that you would go with Ford under these circumstances. Okay, so now we look at, would more debt create unnecessary risk? For Tesla, it would create unnecessary risk, but it would create a very, very low bond rating for them if they even go any farther in their debt ratio. But for Ford, they're a pretty stable company. More debt would create risk, but not unnecessary or extremely unnecessary. So if they really needed to, they could, but we advise them not to. Under these circumstances, we would go with Ford. So now we compare Tesla and Ford to their main competitors, which are GM and Toyota. Now, when we look at their assets, such as cash and long-term assets, Tesla's kind of flip-flopped from the norm of the industry. They have a lot of cash, and they do not have a lot of long-term assets. But the other ones are around like 20%, 70%, and Tesla has cash of 70% and long-term assets of 20%. Now we get to liabilities and equity. They are current liabilities. Tesla has lower current liabilities and more long-term liabilities, which might be a good thing because of expected interest rates to rise, so they could be locked in at a lower rate. But we won't know for sure until that happens. And the rest of the industry, with Ford included, is kind of in line with around 30% current liabilities and around 15 to 20% long-term liabilities. Okay, so now we can ask the question, is our stock fairly valued? Now first we look at Ford. Ford, with our valuations that we did, we came to a valuation of around $11, which would be an undervaluation of around $1.30 or 36 cents. But based on analysts' numbers, they valued the stock at the time of $12, which is still a slight undervaluation, but overall we would say Ford is fairly priced. Maybe a little underpriced, but fairly priced. And now we look at Tesla. Based on our valuations, Tesla is overvalued by around $40. They were around $320 at the time. And based on the analyst's price, they're overvalued by more than $40. And so we can conclude that Tesla may be overpriced by a lot. And so with that information, we would recommend that you go with Ford.